The short answer is liquidity matters. It's the most important thing for investors. We haven't spoken about China yet, but China needs badly to goose its economy. We're moving into a new era. The short answer is liquidity matters. It's the most important thing for investors really to watch and track. The reason the market's gone up is very clearly to do with more liquidity, and that's the key factor. What is liquidity? Let me start by saying what it isn't. It's not a measure of interest rates. It's not conventional money supply. In terms of our definition, which is a long-standing definition that basically goes back to the time that I was at Salomon Brothers back probably two decades or more ago, it's looking at the flow of money through global financial markets. So it's the cash and credit that is available for purchase or investment in assets, and it's the key measure that drives asset. The answer is that we're in a liquidity cycle upturn. That liquidity cycle upturn will not be a straight line, but the next peak is likely to be 2026. And the point that we've been making is that, after suffering a headwind, investors suffering a headwind over the last 18 months with liquidity being drained, what they're beginning to catch now is a tailwind, and that tailwind should last 2 to 3 years.
BlackRock all of a sudden has filed for a Bitcoin ETF that's not futures-based. It's spot Bitcoin, right. Okay?
I don't see how this changes.
If anybody can get it done, would you bet against BlackRock?
No.
They're
the COVID crisis was a watershed in many ways, but it was a watershed in terms of the policy decision of how government spending was funded. It was not funded by higher taxes. Okay, that is unusual. It was funded entirely by issuing debt, and the central banks took that debt up. It was funded entirely by issuing debt, and the central banks took that debt up. What we've got is a similar problem coming up because you've got another big spending program, which is being caused by effectively two things. One is aging demographics, which are forcing mandatory spending programs up. And you've also got the defense bill to pay. And if you look at CBO projections, Congressional Budget Office projections, they've got a relatively passive forecast or projection for defense spending. If you get back to Cold War levels, when America was spending at least 5% of GDP on defense, then you're starting to look at serious levels of debt issuance in the next 10 years, an average of $2 trillion a year, in fact. And the Federal Reserve will likely have to come in and take a large share of that debt issuance. In other words, the Fed balance sheet goes up. Increase because other central banks are going to be adding liquidity. We haven't spoken about China yet, but China needs badly to goose its economy. It's already had one go at it at the beginning of the year. It's cooled off, but it's going to do it again. They're going to have to do that. There's no question. There's no way out.
With the spigots are coming. The liquidity spigots are coming in China.
Yeah, it has to come. Simply because you can't sustain an economy, even a Chinese type economy with 20% youth unemployment. It just doesn't work. They're going to have to promote more growth, and I'm sure that's coming. We got the first inkling of it in the last few days anyway. And then you've got as well what's going on is a major capital shift towards Asian markets. Now that's another factor which comes back to the cross-border flow element. Those cross-border flows into Asia will be monetized by the central banks. And that capital shift is evident, viz. The Japanese stock market. That's going up. We've got liquidity indicators, and there's some in the pack, which show the liquidity movement into Japan. And I can give you there's a chart reference if I can find it quickly. But basically what that's showing on page 17 is the Japanese liquidity cycle and the Nikkei 225 index. And basically that's showing why the Japanese market's going up. And if you believe that liquidity is going to continue to go up in Japan, then the market must rise pretty well. Warren Buffett's made a brilliant call here by shifting some of his funds into Japan, catching it around the bottom. Great call as always. But other markets are going to start to do the same. And so what we've got to start thinking about is the effect of these capital shifts.
The point is digital gold. It is taking the place of what gold did for 5,000 years, right? There's only one money in the world, that's gold. Money is an asset that exists in the absence of a liability. Gold has played that role. It sits at the base layer of currency. Currency backed by debt created by governments to facilitate commerce sits on top of money, gold. And for 5,000 years, gold's done a good job. But gold isn't portable and it's not divisible. Bitcoin, a permanent immutable ledger, does play that role as a base layer of new money going forward, and will build the future of finance on top